Welcome back to StoneHouse Analytics. It's November 4th, 2025, and today the markets have hit a significant liquidity reset. We're seeing gold and silver rejecting cleanly from their daily supply zones, a classic sign of profit taking. Meanwhile, the Nasdaq is dipping its toes into a daily bullish fair value gap, hinting at potential buying interest. Over in the Forex world, the euro and pound are still sitting at key imbalance levels, suggesting that smart money might be gearing up for another major rotation. Let's dive into each chart and see where the next big moves are likely to unfold. First up, the Nasdaq or US100. It has tapped into that daily bullish fair value gap right around the 25,750 level. This move aligns perfectly with the prior accumulation structure we've been tracking. Yes, the sell-off was sharp, but critically, there's no structural break to the downside yet. This looks like smart money is simply collecting liquidity below the 25,800 mark. If the price manages to hold this zone, we could see a retracement back up toward the 25,950 to 26,050 range before another expansion higher. So for now, our bias is bullish from this 25,750 demand zone. Now let's look at gold. XAUUSD rejected the daily bearish fair value gap around 4,020, confirming it as a solid short-term supply zone. Price is now reacting off the daily bullish fair value gap near 3,942.3960, which is maintaining a balanced market structure. If this support level holds strong, a fresh run toward the 4,000 to 4030 area is very likely. Silver is telling a similar story, mirroring gold's move. It rejected the 4-hour and daily bearish FVG near 48.3 to 48.6 and has since retraced back to 47.6. This corrective move is cleaning up market inefficiencies, but the overall structure remains intact as long as we stay above 47.0. We can expect smart money to look for re-entry opportunities around the 47.2 to 47.5 area before attempting another leg up toward 48.8. The bias here is a bullish retracement within a larger, higher time frame structure. Moving on to EURUSD, the euro is continuing its slide and is now hovering inside the daily bullish fair value gap between 1.15 and 1.146. We're seeing the price compress as it heads toward equilibrium, and this could lead to a liquidity sweep before a potential bounce if the 1.15 level holds. We can expect a recovery toward the 1.157 to 1.16 range. If it fails, the next major draw on liquidity sits at 1.145. The bias is neutral to bullish as we watch this recovery zone. And finally, GBPUSD. The pound is also consolidating near a key daily support zone around 1.31 to 1.31. After rejecting from multiple 4-hour bearish FVGs, smart money may now be engineering liquidity for a rebound. A clean break and close above the 1.316 to 1.318 area could be the trigger for a new bullish corrective phase, so our bias is neutral to bullish, contingent on that 1.31 level holding firm. To wrap it all up, today's session shows a broad liquidity reset across the majors. The Nasdaq is testing deep demand, gold and silver are rebalancing within their existing structures, and both the euro and pound are sitting at potential reversal zones. This has been your StoneHouse Analytics Market Outlook for November 4th.